fundsupermart.com.
Is it a good time for investors to get on the commodities bandwagon for the coming 2 to 3 years?
Well, at Amundi, we are cautiously optimistic. The reason being the following, that over the last few months, central banks have injected a large amount of liquidity into the system, and this has reduced the systematic risk in the financial system. So we say, don't fight the Fed, don't fight central bank action. However, we are very aware of the fact that the economic fundamentals and in some areas the earnings momentum is not quite correct yet. So this is why when we say look at global resources today, is that we are, as fund managers, are looking very closely at the earnings visibility to choose the sectors within the global resources sector which has good earnings visibility.
What are the key drivers that drive commodity equities?
Well, it's an interesting sector because unlike the physical commodities, which are driven primarily by factors of supply and demand, commodity equities are driven by 3 different factors. One is the overall equity environment. So for this, we're looking for low to steady inflation rates, low interest rates, a steady growth in the economic environment, but also favorable risk premium ratios. Secondly, we are looking for a high quality of earnings visibility with growth. So this is not only the volume of price, but we're also talking about the cost of production, the cost of debt. And the third reason for analysing commodity equities is actually M&A, because this is a sector where M&A can create value for shareholders.
What are the key risks for commodity equities?
Well, I think as I mentioned earlier, as commodity equity investors, global resource investors, we are looking specifically for the sectors which have got earnings visibility. And today what we feel is that some commodity equities do not have very good earnings visibility. So unlike previous years where the commodity class has been relatively correlated in that all commodity equities would appreciate at the same time, today we feel that there is a slight divergence, and today it is important to be on the right commodity equity.
Are there any sectors or trends that you are particularly bullish on?
Well, one of the sectors that we do like is the oil and gas sector, which is a heavyweight in the equity sector. Why do we like it? Well, partly because just the news flow worldwide is very, very stimulating, very dense today. We're talking about demand for LNG, we're talking about oil demand, but we're also talking about new technology, which is resulting in the extension of mature fields in the North Sea. And of course, we're talking about shale gas technology in the US, which is changing the economic situation of the Americans, who won't be obliged to import as much oil in the future as in the past. So not only the news flow overall global wise for the sector is very exciting, but also the valuations, the risk reward ratio for the sector is very positive today. So we also like the manufacturing sector, but with a bias towards the US, because the American manufacturing is now benefiting from very cheap gas prices.
Are there any sectors or trends that you are bearish on?
Well, the area that we remain still cautious on, as I mentioned earlier on, there are some commodity equities which are not showing the clear credible earnings visibility that we're looking for. And these are in particular commodity equities which are exposed to the infrastructure cycle in China, where we're seeing still worrying statistics coming out in the steel sector, in the iron ore sector, in the coal sector as well. So this is an area where we're still concerned that we haven't reached the bottom of the earnings downgrades, and although we've been underweight for several months in this sector, we're still not ready to increase our weighting.